Here's everything you need to know about the home office deduction. This deduction is only available for self-employed activities. This means that you need to run a business from day to day or embark in a side hustle. This deduction is available for all business structures, whether you're structured as a single member LLC reported on Schedule C, as S Corp, a C Corp, or a partnership. The only test you must meet to receive this deduction is that the home office must be exclusively and regularly used for business. This simply means that you can't really deduct your kitchen as a home office. Even though you may work in your kitchen, that area is not exclusively used for business. Once this test is met, there are two methods we can use to write off this deduction. The first method is the simple method. In this method, we can write off $5 for every square foot of your home office, up to 300 square feet. In the actual method, we'll actually prorate expenses based on the size of your home office. For example, your mortgage interest, the rent you pay, home or rent insurance, repairs, utilities, and even depreciation. We will prorate these expenses based on the size of your home office. In a nutshell, this is how the home office deduction will look like. So in this example, let's say you own a 2,000 square foot home and you have a 400 square foot office that you exclusively use for business. In the simple method, we'll allocate $5 per square foot, but notice how we'll only use 300 square feet because that is the limit that we're able to use. This will result in a $1,500 deduction. Notice, this is what the lazy accountant does. I recommend if you see your accountant giving you the simplified method on your home office, run away and give the buff accountant a call. In the actual method, we'll be prorating the actual expenses you paid on your primary residence. In this example, we'll be able to write off 20% of the following expenses: mortgage interest, homeowners insurance, utilities, real estate taxes, and depreciation. In this case, let's say we paid $25,000 in interest, $1,000 in homeowners insurance, $3,000 in utilities, and $2,000 in real estate taxes. We will then allocate 20% of these expenses onto the home office deduction. After doing this allocation, we come down to a bottom line deduction of over $9,800. This is in comparison to the $1,500 that we would be able to write off in the simple method. The remaining 80% of the mortgage interest and real estate taxes that we did not write off using the home office deduction, we can write off on Schedule A as an itemized deduction. In the end, we'll have an $8,300 difference between using the simple method and the actual method using this example. This increased deduction will result in over a $2,000 reduction on your tax bill.